E-mini S&Ps end the week near the highs. We obviously have held that sustained trade. We didn't pop out on Friday to make a brand new high. Things kind of pulled back a little bit after what has been a very exciting run higher, everything trailing behind the NASDAQ, kind of trying to play catch up. But E-minis holding their own, still well above any key technical levels. So pullbacks are not feared and actually still looked at as buying opportunities, as a handful of names really guided us here with earnings this week. Those big tech names drew everybody higher as they came in stronger than expected, or at least were looked at upon as future revenues and future earnings to be stronger than expected. And obviously that's what's taken the market. But next week we're going to start to get some meat and potatoes type earnings. Those are just the regular guys, they're not the big fancy names. So it'll be interesting to see how we kind of transpire after a big week like we saw this week higher with all those earnings. How do we do now when we get back to the meat and potatoes? So right now the equity market's still holding on those highs, whether it be a sustained trade sideways, still a lot of euphoria there as they tell one story. The bond market, which has been seeing yields creep lower, is telling another story. One of those stories can't be ultimately right, euphoria versus reality. And I think at this point, the stock market still has some upside to it until there's some kind of catalyst event, but the bond market's telling you that event is coming. We will have to wait and see. The VIX index, obviously not saying there's anything coming, as it's going to settle at its lowest Friday price since the beginning of the pandemic. So obviously volatility, no fear of a pullback. And like I said before, any modest downticks in the equities are just looked at as major buying opportunities, and will continue to be until they're not. And when they're not, obviously it's going to be a very difficult trade to sell out of. But I don't see that coming in the near term right now. I think we need to continue to plug along. We'll continue to get earnings. We'll continue to feed off of these tech stocks, which continue to push the markets higher. And the bond market and the other guiding markets will continue to do what they're doing. And ultimately, there's going to come a breaking point, but I don't see it in the short term. Lastly, next week, like I mentioned earlier, we are going to get some key numbers, jobs. We have some key earnings reports. And I think one of the bigger reports we're going to get next week is going to be vehicle sales. Now, this is not something that's looked upon as a huge number month to month. However, given the declines we saw in March and the even bigger declines we saw in April, we've just started to see it come back in May and in June. So I think at this point, that number is going to be key. Can we get back to those pre-pandemic levels or continue moving towards those pre-pandemic levels in vehicle sales? It's a big part of our economy and obviously suggests that people are out buying cars. That might be a good thing. Other than seeing the tech stocks rally, it might be good to see some of these other stocks rally. So at this point, that's going to be one of the numbers I'm looking at next week. Obviously, jobs and claims will be also out there. So heading into the weekend, not quite as bullish as we've been the last few weeks, but certainly ending the month on a high note. Equities going out, euphoria is still very high, but for how much longer?